Good afternoon and welcome to Market Sense. And before we can even get to the headlines, let's address the flashes on your screens. Breaking now are the January WPI inflation numbers. And well, they stand at 2.84% for the month of Jan. This is versus the ET Now poll of 3.1%. Now, remember, we had a number of about 3.5% that came out just last month. So you have seen inflation significantly cool off, and it's also come below what we were working with. The November WPI inflation, though, that's been revised upwards to 4.02% from 3.93%. And the Jan WPI inflation stands, as I said, versus a figure of 3.58% in December. Let's take it across to Maithili Bhushnurmath, who's standing by. Maithili, we don't have the internals right now, but how are you looking at a number of about 2.84%?
Well, I'm a little surprised because the WPI has a higher weightage for fuel, and given that oil prices had in fact touched 70, of course very briefly $72 to a barrel in the month of January, one did expect a higher WPI, maybe less than the previous month, but a significantly higher WPI than the 2.84. So certainly government can kind of pat themselves on the back and point to this, even though the RBI, of course, since it's been focusing on CPI, has been talking about CPI inching up. We'll have to see the internals because food inflation, perhaps the fact that it has a low weight, and last time in the CPI, the food inflation contributes more, it perhaps could be a reason why it has not put pressure on the WPI. But I'm a little puzzled, as I said, that why WPI has come in so low despite the higher weight of fuel and power. Perhaps the only explanation can be that manufactured products, which have a 75% weight in the WPI, there has been virtually no price inflation on that at all, and that is not a very heartening sign to the extent that it shows that excess capacity in the economy is still not being used up. There still is no demand pressure whatsoever for manufacturing, and that's not good news at all.
Okay, that's a view coming in on the numbers and the initial reading. Maithili, I want to discuss a lot more with you in great detail, but for now my colleague Poonam is standing by and she's here to give us a breakdown of all the numbers and walk us through what's come in for manufacturing, food articles and primary articles inflation. Poonam.
That's right. In fact, Aman, if you look at the data points, we're seeing the manufactured inflation coming down at 2.78 versus a 2.61 during the last month. So that's the reason why we are seeing the core WPI inflation rising during this month. It's primarily on account of the higher weightage that we already see in the entire WPI basket, wherein manufactured products does have, I guess, nearly around 70% of the weightage comes towards the manufactured products, and hence we're seeing that upwards jump or in terms of the core WPI inflation data. But if you look at the fuel and power inflation, it's come down during this month. It's coming around 4% during this month versus as high as 9% during this last month. We're also seeing that on the expected lines, the food articles inflation has come slightly down. We're also seeing the primary articles inflation also coming slightly lower during this month. So more or less it's pretty much in line with what we were working with. But having said that, the headline WPI has come sharply down at 2.84% versus the poll expectation or versus the consensus expectations of 3.1%, and it does show that probably the pricing power is still not there that much in the economy, and we really need to be watchful of that. We also saw the CPI inflation coming down during this month, and the expectations are remain range bound, wherein most of the economists do state that maybe we do see, of course, higher inflationary expectations going ahead, but the House completely remains divided in terms of further rate hike or a cut or an extended pause, but most do expect an extended pause from the RBI, at least in the medium term. But as of now, yes, definitely easing WPI inflation, easing CPI inflation, and the uptrend in terms of the IRP has continued for a second month, which is slightly a good sign, at least as of now there.
Right, Maithili ma'am, again, I've asked, that what would be your weightage as far as CPI and WPI is concerned. So WPI is, it comes after the CPI data, but CPI is what investors, market participants, RBI focuses on. So WPI has a very limited impact in the trend that it creates versus CPI.
Well, yes, certainly, because ever since RBI became the inflation targeter, it has been focusing almost exclusively on CPI. Of course, no central bank, even if it is an inflation targeter, can look only at one parameter, which is the CPI. The WPI will also be a factor, but to the extent that it's come down and come down much more sharply than the CPI will perhaps be a bit of a puzzle to the RBI, because as I said, since oil prices did go up and fuel has a much higher weight, clearly this would suggest, as Poonam also indicated with the internals, that manufactured articles, there is virtually very little inflation in that. It's much less than 3%. So to that extent, I think pricing power is not returned to manufacturing, which means excess capacity in manufacturing continues. But let me now turn to Upasana Bharadwaj and ask her, Upasana, are you a little puzzled really by the fact that the WPI has fallen so much more sharply than the CPI? The fall in the CPI was much less, from 5.21 to 5.07, whereas in the case of the WPI, the decline is much more marked. Are you a little surprised, particularly given the difference in the weightage between the CPI and the WPI? Upasana?
Yeah, hi. Can you just tell me what is the primary inflation number?
I think we'll have to toss it to the Bombay studio, because the primary inflation number, to my recollection from what I heard of Poonam, is a little over 2%. But maybe Bombay studio will be able to give you a better picture of the
I'm going to come in there. The primary inflation number actually is a 2.37%. Yeah, 2.37%.
I think that's where the surprise is. Yeah, I think that's where clearly the surprise is. You know, on the manufacturing or the core inflation side, yeah.
2.37 versus 3.86%. You have that number at hand. Primary articles.
Yeah, right. So I think clearly, like I was saying, it is the core inflation around probably 3.25% or so, which is not really a surprise as against about 3.2% what we were expecting. The surprise is more on the primary articles, and within that, I think the food inflation probably, the winter month effect, the seasonality is probably being felt, through the month of January. And even if we look at a little more through February data, the 2 weeks of data that we have, that is also suggesting that there is further moderation in most of the food articles. So I think looking at that trend, probably at the wholesale level, the primary food articles have, prices have come down much lower, or the prices of food inflation have come down much more than what we were expecting. And that's where the headline is really showing significant downside. Having said that, I think it is CPI where we need to focus on. Of course, a much more moderate food inflation within WPI clearly suggests that the pass-through from WPI to CPI in the subsequent few months is going to be positive. And hence, the food inflation within CPI is going to be capped further. So I think it is positive from that perspective as well. But having said that, from a policy perspective, of course, the headline CPI inflation is important for the Monetary Policy Committee, and that is where they will focus on. And I think if we look at what goes ahead, food inflation in itself has an adverse base effect that in turn will result in mean reversion of the food inflation going higher. And along with that, the headline CPI inflation in itself also has a significant adverse base effect. So all in all, the next few readings are going to be very crucial, because RBI has given a peak of 5.6% in somewhere around June, and that peak seems to be a little lower than what our own estimates are suggesting. We are looking at about 5.8% as the peak in the first half of this calendar year, and that is where we'll have to see exactly how the outturn will be. And once that we tide over, we'll have to see exactly how the Monetary Policy Committee reacts post that.
Okay, stay with us, Upasana. Arvind Narayanan, ED and Head of Sales Treasury Markets at DBS Bank, now joins in. And, we're looking at a number of 2.84% for the month of January for WPI. Fuel inflation at about 4.08%, but primary articles has come in lower at 2.37%. Upasana was just talking about the importance of the CPI numbers from a policy perspective. What is your sense as to how, the markets would really react to this number, and your sense on policy as well, Arvind?
So going to the policy first, I think one thing is definitely clear is the RBI was much less hawkish than what was expected. So by and large, I think that kind of cooled the markets a bit. Indian bonds were a bit of a relief in that. But having said that, I think it's expected that as we go towards the second half of the year, CPI is definitely going to come down. So that's going to be kind of positive. But Indian markets would not be rallying definitely based on this. We've seen U.S. interest rates going up quite substantially. In fact, if you saw the data last night, the U.S. CPI has been good and U.S. 10-year rates have gone towards 2.9%. Oil, though, has shown us a bit of a relief, but that would still be something which is on the cards, which we'll be watching. Looking at these situations, I think it's not that the bond market will be ready for a rally, but yes, any down move on these data points will be watched quite closely, and I would definitely watch out for the inflation data and the oil prices.
Upasana, you spoke at length about the primary food inflation, but the fact is that in the case of the WPI, primary articles account for less than 20% weightage. So the substantial role that is played in the WPI is that of manufactured articles. So what is the fact that manufacturing inflation remains still so subdued? What does that mean for the larger economy? And will the RBI, even though it focuses on CPI, look through the WPI to see what does it mean for growth in the economy? Upasana?
No, clearly the manufacturing inflation, which is marginally higher from the previous month. So, it's not as bleak. If you look at overall the commodity prices, they did surge in the month of January. In fact, oil prices itself was 7 to 8% month-on-month increase we witnessed. So, on the manufacturing side and especially core inflation, clearly, that is visible that there is some kind of a pricing power which is coming back. It is more the fuel and the primary which has probably led to the suppression of the headline WPI, and that's where the differentiation has to be met. I think from a more larger perspective, of course, pricing power still remains muted in the economy. It is just vis-a-vis the previous month that is slightly better because the manufacturing product inflation is slightly higher than last month.
Arvind, I'm not sure I quite agree with Upasana that there is any sign of return of pricing power to the manufacturers, because manufacturing inflation is still much too low and manufacturing counts for 75% of WPI. So what is your interpretation? Primary fuel is a little surprising given that oil prices had gone up, but I would think that the basic downward pressure on the WPI has come essentially from manufacturing given its weight in the WPI. So would you agree with Upasana, or do you think it's more the manufacturing inflation, the subdued manufacturing inflation, that is a cause for worry from the larger economic perspective? Arvind?
No, so subdued manufacturing inflation is definitely a cause for worry. So I would definitely go with that perspective. But what needs to be seen is the underlying context of where is this inflation disappearing or where is it coming from. So if you look at the kind of activity which is available, the kind of surplus capacity which is available, all that is slowly getting filled up. So what was excess capacity is kind of getting filled over a period of time. We're also seeing global growth coming back, which means, again, you will see a pickup in inflation. You will just see a pickup happening there. So I would look through this, even if the inflation numbers are low, I would look through this and kind of base my overall analysis on where global growth looks, what is the kind of pickup which we are seeing in the Indian banking system, and look at what kind of offtake do we see now.
All right, we're going to let you go on that note. Thank you so much, Arvind, Upasana, as well as Maithili, for taking time out, assessing those numbers and giving us your contrary views as well on the overall pricing environment, as well as dissecting these numbers in terms of what could potentially happen from the upcoming policy as well.